So this is the S&P 500 depository receipt. And you can see here that SPY has gone from a low just above 410 to the highs that happened back at the beginning of April. So a month ago, we were at 523.21. From there, we pulled back. We did not reach the 480.22 support. Not saying that we're not going to go there, but recently, as in the last week, we started moving back up again. I believe we're going to take out that 523.21 high. I think that, if you look at where seasonality is right now, where trend is right now, that the fact that we did not pull back and make that 480.22 mark, and that now trend indicators are starting to consolidate to push higher, I believe that we're going to see higher highs into the summer. And I'll talk a little bit about that here in just a few minutes. But that is SPY. Take a look at bonds. This is one of the reasons why I like the potential bullishness. And really one of the big reasons is the bond market's been moving lower. And in fact, we just came off of multi-month lows, or year-to-date lows, if you want to call them that, because the high that happened on the chart you see, that was back at the end of December. And so here's your year-to-date highs. We're basically coming off of 152. Lower high, lower high, lower high, lower low, lower low, lower low. We're getting a bounce. But this is what I call the Goldilocks area. The Goldilocks area is between 89.55 and 93.14. As long as we don't go one way or the other too hard, that's going to be good for the stock market, because the stock market doesn't like to see bonds go precipitously lower, because that means higher rates are coming. And they don't want to see bonds going flat out to the sky, because that means everybody's moving from risk on to risk off. So this is the Goldilocks area right here where I want to be. All right, oil. So oil has a double top that has happened. You go back to the end of September, and then you look at what happened around the beginning of April, and you see the top that came in at 82.90. I believe, again, because we see bullishness right now for the stock market. More importantly, we've got a multi-month seasonal pattern going on with oil, that we still are not anywhere near the end of that seasonal pattern. That seasonal pattern doesn't end until July. So we have May, June, and going into July, where we still have very seasonal bullish outlooks for oil, crude oil, gas, USO. So I see this going higher. I think we're going to get above 82.90. I think 85, possibly even 90 could be the top we see by the time we enter into summer. So there's what my outlook is for USO and crude oil. Gold. This is the hardest one to look at, because, half the time it's a safety asset, safety and security. Half the time you hear it as an asset, or in this case, a commodity. It moves like an asset, which means that it moves a lot like the stock market. But it had one of the biggest moves in March into April that we've seen in a long time. I mean, this is the beginning of March. We're down here at 190. And by the time we got to the end of March, we were already up in the 220 area. Did a little shimmy. 221.22 is our top resistance. We've had a kind of a meager pullback. This is not a pullback that I would expect to see a much better pullback, but just a lot of consolidation in the last couple weeks, pretty much right around where we are right now, around 215. This is going to break one way or another. Now, trend says that gold is continuing to move higher, but we're entering a seasonal pullback area, so really anything is possible. I would put some dotted lines on where we were last week, around 216, 217, and down here near these lows, which are around the 213 area. And whatever way we end up closing, that's where the momentum is likely to be for GLD and for gold. Bitcoin. Still consolidating. We have support down here at 60,285 for Bitcoin. The resistance is still the highs that we saw back in March at 73,118. So 2 months ago, we were hitting all-time highs. Since then, we had a quick pullback down to 60,285 once, twice, and then of course here we're slowly sliding in. I got to say, when I see that slow slide, unless we get some sort of buying, some big buying moves here in the next want to say the next week, I believe we might see 56,320 and or 52,356 in the not too distant future. And part of the reason is we're starting to see more outflows than inflows happening with these big ETFs. First time since January that we're now starting to see outflows happening with Bitcoin and with Ethereum. Now, the longer term picture looks like this. The long-term picture, I'm still holding my 87,000 to 109 by this year that we hit that we move up into that area. And of course, really serious trend line support is down around 30,000. So that's my ideas of where Bitcoin is going. Ethereum, little bit, Ethereum's a little bit weaker than Bitcoin. We have pulled back from those highs of 40.65 down to below 38.59 or 33.59, below 31.41, and hit the 29.23 support area earlier this month. Since then, we've pulled back above. Yesterday, which was Sunday, we came very close to getting above the 33.59 area, which I think is the breakout area. So until we get above and close above that, I think that we still meander for Ethereum. We get above and close above this. This is when Ethereum might flip over and become the head of the train instead of the caboose, which it is doing right now. So that is stocks, bonds, commodities, crypto. Let's talk about May. And let's talk about this. Let's talk about this expectations for Ethereum. 5,700 is my target on Ethereum by the end of the year. We have bottom line support down around 2,000, which is well below where we are right now. Now let's talk about May. And, May is typically that sell in May and go away. And I'm calling it, is May a sell in May and go away? Or is May a stay in May and make money today? If the money counter has anything to do with it, take a look at all that green that really starts to happen after May 1st. May 1st is a 67%, 33% area, but then we start to go green. So let's talk about details with the money counter, and then we'll come back to this particular screen that you see here. So the money counter is, immediately, for those of you that don't know it real well, it is a quick look at a calendar. It looks like any calendar, but it's got a lot of numbers in it. And the numbers are the top traded stocks that we track that have 90% patterns going back 10 years, all right, where we have bullish or bearish patterns that happen 90% of the time or greater. And so I'm able to go into any of these days and see the start date of those patterns. So when we go into that, what we look for are a couple of things. We look for trade duration. How long is that pattern going to last? If it's green, it's bullish. If it's red, it's bearish. How long is it going to last? When is the end date for that pattern? So, for instance, if we're looking at today and we see XBI as a trade today, I know it's a 30-day pattern. So I know that 30 trading days from today is when the end of that pattern happens. So I get to see that on all the stocks that we look at. We also look at accuracy. Some of these have patterns of 100% accuracy going back 10 years. That means the last 10 years that we've gotten signals during today's start date have been profitable. And so we look at those as well. We'll also look at average trade profit. What did the stock in question make during that pattern on a year-by-year basis? And so we factor all of those in to help us determine which ones that we want to look at. And finally, what I think is the most important thing we look at is something called the power meter. The power meter actually gives us a positive number. We look for positive numbers on the power meter. The more positive, the more that we're seeing profits increase over time. So that's kind of a quick down and dirty of the money counter. So back to May, and we can see here's the first day of May, May 1st, and we see there's 109 out of thousands and thousands of stocks out there. 109 of them right now are producing patterns that start on Wednesday, May 1st. 73 of those 109 are bullish, and 36 of those 109 are bearish. That shows a 67% bull to bear ratio, which is why this is colored kind of light green. You see the darker greens, 87%. Look at the May 10th, 90%. Look at May 17th, 97%. So out of 185 trades, 180 of them are actually bullish patterns. And so you can see that we go into the month of May where we don't have any pattern that is orange or yellow. We have more bullishness than bearishness. This is going back 10 years. So when I look at sell in May and go away, now sell in May and go away is a multi-decade strategy. But if you look at what's happened in the last decade, sell in May and go away means to me maybe we need to push away sell in May and go away and concentrate more on what the most popular stocks are telling us. Now, if I click on May 1st, I'm going to get, and I pulled and stripped out the top 12. So these are the top 12 seasonal patterns that start on May 1st that are ranked by power meter. That means that the higher that number is over there, the more of a trend we're seeing happening. That's happening more now than before. And so booking.com is at the top of the list, which means starting on May 1st and ending on May 10th. This is an 8-day bearish pattern. You might wonder, why is it bearish? It could be, again, the seasonality for Booking. Booking is a travel site. Travel and leisure have done really well, but they tend to pull back for that first half of May when you add the weekends and the holidays in. The first 8 trading days of May, we see that happening. We also see Avgo on here. Nice power meter, 22-day bullish trade. Brings in an average trade profit of $26.83. But again, because the power meter is so large, that means that if you take a look at this on a day-by-day basis, you're going to see the last few years brought in a lot more than 2683. That 2683 is all 10 years combined and averaged together. All right. I see Lam Research on here, Adobe, K-Lock, Now is on AMD, Salesforce, MDY, which is, by the way, an ETF, AMT, NOC, and VMware round out that top 12. 11 of these are bullish, 1 is bearish. So basically what this is telling me is it's telling me that, looking at those top 12, and a lot of these are tech stocks, that this is weighted on a lot of stocks that you and I and the investing and trading public are really leaning into.